going on, YouTube? Welcome back to the Real Estate Duo. I'm Alex Manilov,
And I'm Kevin McKenna.
and we're going to answer some of your real estate related and mortgage related questions today. So, what questions do we have?
What's that word again?
How?
How does the market compare to 2 years ago?
I'd say it's pretty similar now. The market, people have gotten used to the 7% rates, 6-7% rates, so people still need to buy. And the Florida market, unfortunately, is not going anywhere, or fortunately, is not going anywhere. And I think people have just adjusted to it now. So, with rental prices increasing and pretty much everywhere, no matter where you are, and the mortgage price being pretty similar, if not still better than the rental price, I think people are just saying, I'm buying a house.
Yeah.
And, that's kind of where we are, where like 2 years ago, interest rates were like 3-4%. And it was free money, so everybody was moving here. And now all those people who have 3-4% rates are settled. They're not going to sell.
They're not selling. So that's the problem. We're back into an inventory crisis.
Huge.
Where we're selling way more homes than we're listing, because why would you list your house? I'm going to list my house with my 2% interest rate.
Yeah, and then what?
Go get a 7. It's not going to happen.
Take a 5% hit.
So there's going to be the few years where we're going to be in that in-between zone, but eventually people will have to move for jobs or just want to get out of state for whatever reason.
Distressed home buyers,
Exactly. I'm curious about moving to Orlando, but I want to buy something that'll appreciate in value over 5 years. Where should I look?
So for all my buyers, I always tell them that, purchasing a home, and for people out there too, purchasing a home is a investment. It's not just a place to live, but it's something that can make you money too. Especially if you're young, pretty much under the age of, I would say 40.
I mean, well, yeah, there's also if you're not settled down yet and you have the ability to move frequently.
Yeah.
And it's not uprooting 4 other lives.
Mm-hmm. So like me, for example, and we'll get to the answer to the question, but for me, I don't have a wife or kids or anything like that. And it's easy for me to buy a property every year or two, and keep moving around as I make a portfolio before I find, the dream house.
The minimum down payment.
Yeah, keep using the minimum down payment and buy something nice. So what I tell people is to look north or south of Orlando. So Kissimmee, that'll be Kissimmee south, Davenport area, next to Kissimmee, maybe even Haines City. You can get new construction out there for the high twos, like 270, 280. And 10 years from now, that place is going to be overgrown and built up, and you'll sit on a nice investment. And to go north, I'd say go to Deltona, DeLand. We've already started to see the appreciation wave really hit Deltona, where a year ago at the peak of the market, you could get a good house for $250, $300, and now like to get a decent house, you're going to be paying anywhere from $325 to $350. And the new construction in DeLand now goes for $350 to $400.
Yeah, it's crazy.
It's insane. Where no one knew what DeLand was 5 years ago.
Yeah, I mean, you had a few buyers that bought up there, and they've made a killing in the last
couple
years.
Yeah. People I know, like some of my first clients in 2021, 2020, end of 2020, who bought up there in the low twos. Some of them reached back out and said, my house is worth 3 something now. What should I do? I tell them to hold on to it, refinance, take the money out, and go buy something else.
Yeah.
And if you can do that, if you can't do that, just hold on to it. There's no reason to sell, especially if you have an interest rate under 6%. You're not going to find it again. So, to answer your question, north or south of Orlando, greater Orlando area is the move. Not everyone has 600, 700 grand to buy a house in Orlando that would fit what they need.
And that's 0.01 acres.
Yeah, 0.01 acres. You get to reach out your kitchen window and touch your neighbors.
Yeah, hear your neighbors at any given time.
Yeah, nobody wants that. So what's next?
I'm interested in buying, but I think mortgage rates are too high. What should I do?
Well, this kind of goes with the last question too. It's like, mortgage rates historically are still pretty low. For example, our one of our partners, he bought his first house in the 80s, obviously, way different time. Paid 150 for it with a 14% rate, and he was happy.
A lot less money.
But still, you're paying 14 grand a year in interest.
We battled that when the interest rates are 3%. People go 3%. That's too much. They're still going down.
Yeah.
It's like people will never be happy with it, and at the end of the day, the appreciation of real estate will always be better than the inflation for interest rates.
Yeah,
as
and
a
like
whole.
ideally, for a healthy economy, a 6% rate is great, and it's the money is not free like it is at 2.5%, but it's not going to cost you an arm and a leg, and it's still better than renting because interest rates on rentals, they're 100% because 100% of your money disappears. It goes to the management company, the landlord, into the ether, whereas your mortgage payment every month is building the virtual savings essentially into the equity of your home, and that just helps you take that money out, do renovations, take the money out, buy more property, save it. Hell, you retire and you bought a house for 200 grand in 2020 and it's worth $500,000, and you want to go somewhere else. It's a good chunk of change.
Yeah.
So I would say if you're nervous about the rates, don't look at it as a long-term problem because they will eventually come back down. It may take 2-3 years, but if you're in now at 7%, and let's say they shoot up to 10%, you're gonna wish that you were in at 7%.
Yeah, exactly. No matter what, if they go up, you're gonna say, "Man, I'm glad I got in." Or if they go down, you refinance.
Exactly. So either way, it's a win-win scenario. And if you can bite the bullet to ride a 7% rate for a couple of years, just do it. In the end of the day, you're gonna own the home. You're gonna be a lot happier. You're gonna be your own landlord, and it's a good freedom to have.
Do you think the market is going to crash because of change in mortgage fees, which has been a huge topic of discussion?
It's been a huge
through
topic for like
mainstream
3
media.
months.
Well, no, that's the thing. They made these changes 2 months ago, and then the mainstream media just picked up on it probably a week and a half ago.
Yeah.
And now everyone thinks 2008, we're all done.
It's
for.
over.
Everyone,
It's over.
We're screwed. This is actually went into effect 2 months ago, not last week.
Yeah. So for people concerned about the mortgage fees, and if you watch mainstream media, it's all they have no idea what they're talking about. They're claiming that the market's going to crash.
They want to
And-
sell you on fear so you can watch their Pfizer ads.
Exactly. Sell you on fear, watch the Pfizer ads, and then eventually, they're all going to make money off your fear anyways, right? So it's a complete misconception. Yes, it is true. At a 780 or above credit score, you will be paying a higher fee, but it's based on loan to value. So loan to value is, if you put 20% down, your loan to value is 80%, where you have 20% equity and 80% of it is a loan. So it affects people's loan to value between or under 80% or 70%. 70. So, with that being said, if you're 780 or above, you will have a higher fee for that. If it's, if you don't make that 70% mark, which is the majority of people, but if you're under 680, you will be paying a less fee based on the higher fees of the people who put less money down.
And how much of a percentage are we talking about?
So to avoid the higher fee, you have to put more than 25% down.
Yeah. But no, how much of a change did they make?
Yeah. So for people with 780 or above, you're putting the fee is 1.75% higher, which doesn't sound like a lot, but if you have a $500,000 loan,
just the fee. It's not over the course of the loan.
Yeah. It's just the origination fees.
A one-time fee.
Yeah.
It's not it's not 1% every year for 30 years. It's 1% for the one time.
Yeah, exactly. I mean, it's part of your closing cost. And people with 680 or above pay 1% instead of paying more, which is how it used to be. And the reason for the fear, I would say, is because, like in 2008, well, pre-2008, what was happening was banks were writing loans and giving out loans to pretty much anybody and everybody who could speak English and put a signature on a page.
It was an underwriting problem.
Yeah, there was a real bad underwriting problem, and they didn't really enforce it. So they were giving out loans to people who couldn't afford them. Now, what's different is, even though you are paying a higher fee, in some cases, depending on where you are on that spectrum, they're still going through the underwriting process. They're still tearing apart your credit, making sure you can afford it.
They changed the underwriting process.
Yeah.
It is 10 times harder to get approved for a loan than it was pre-2008.
Yeah, it is not like how it was back in the early 2000s or any time before that.
Yeah,
it
we're
is,
not going to have
it
a
is
bunch
very
of people
different now.
that are making $10 an hour. They're buying homes for $500,000.
Mm-hmm.
It's not going to happen anymore.
So I don't think the market will crash because of it. I think, and if anything, we've already seen it already with the interest rate hike, that there is a normalization coming.
Yeah.
10 to 20% drop depending on what area you're in. We've seen sellers drop their prices to match what people can afford, and that's great. But they're still high, and they're still high because inflation is high and building costs is still through the roof. So that's
Yeah.
going to hold up the real estate market for a while. But on top of that, down here in Central Florida, we have a big, again, inventory issue. So, when the supply is low but the demand is high, prices rise. Thank you for joining today on our Signature Sunday segment. We're going to try to do this every week, along with our podcast, Real Estate Horror Stories. If you haven't seen that, it's on YouTube and anywhere else you can get podcasts. Like and subscribe to the channel.
And don't forget to leave more questions for next week.
Yes,
Any
yes.
questions you guys have, we'll be happy to answer.
Put the
next
questions in the comments below, and we'll take out as many as we can. We only had a handful here because we just started. So the more people that start watching, the more questions that get asked, the more questions that get answered, and then everyone can kind of start going along with a nice level head instead of being scared about market crashes and what to do with their money.
week. All right.
Cool. We'll see you next time, guys.
Cheers, brother.
Have a good one. Easy.
I think that sells, dude.
Sold.
Oh yeah, probably gotta stop that. Huh?
Yeah, that's a good idea.